Wednesday, December 14th, 2016. Monaco 64, home of alternative economics and contrarian views. So it's 5 past 7 p.m. London time, 5 past 2 Eastern Standard Time, and the Fed just hiked interest rates by 25 basis points from 0.5% to 0.75%. It was a very much priced in decision, very expected. One thing though that Zero Hedge notes is that people are looking to see the communication of the Fed, and they said that they have this dot system, and now they've got 3 rate hikes expected next year, 2017, instead of 2 rate hikes that were expected in September earlier this year. So, I mean, I was watching the markets before the Fed and prior to the Fed. So 30 minutes before the decision, for example, gold was 1161. We're now 1156. We actually dipped right on the, right at 2 p.m. New York time when the Fed came out. Gold dipped to 1151.90. I think that was the low earlier this week, 1151. So it's kind of a double bottom there. The Dow is up 6 at 19,912. We were trading at 19,921 half an hour before the decision. Silver is 1704. So it was 1714. So it's down about 10 cents since the decision. What else? Currencies. Let's have a look here. The pound is right now at 126.38, so it's dropped quite a bit. It's down 20 on the day. We were trading around 126.86 prior to the Fed decision. So it looks like the market, it's taken that as being a little hawkish. Personally, what I think, and actually there's an article as well on Zero Hedge, and I quote, it says JP Morgan's pre-FOMC market update. And I quote, monetary policy isn't driving the tape at the moment. They think it's more related to politics, fiscal policy of the incoming new administration, tax policy. I personally think that central banks, Fed included, Fed's been the leader, they have just been too accommodative with money, easy money. The Fed is not hawkish institution. It hasn't been hawkish for about 10 years, the Federal Reserve. And it's like the old saying about, I think it's one of the old Fed chairmen back in the 70s or 60s, said the job of the Fed is to take away the punch bowl when things get too frothy. And they've left the punch bowl for the last 10 years. So yeah, the markets are doing great right now, but I think there's a lot of dangers out there. Nothing has changed. In my opinion, of course, central banks have no credibility with me. I'm a proponent of free banking. We don't need a government created monopoly to manage the price of money. We can have the free market do that. Free market decide on which currency people want to use, competing currencies, like Friedrich von Hayek mentions in his works. He's a famous Austrian School of Economics economist who wrote The Road to Serfdom about socialism. So yeah, Fed decision, very much expected. I think only 10% of the people, economists surveyed, expected a 50 basis points hike. To say that the Fed is hawkish is all relative. I think they've created a lot of trouble and nothing's being fixed, in my opinion. They just shoved everything under the carpet, all the problems. They have a huge balance sheet, let's not forget, $4.4 trillion balance sheet. of mortgage-backed securities and treasury bonds. So nothing, they're not out of the woods. So looking here at yields as well, the 10-year yield now is almost back up to 250. We're at 248. We were trading 244 earlier, half an hour before the Fed decision. The 30-year yield is 312. That hasn't gone up as much. But right now, yeah, the 10-year yield is around 249. And I saw an interesting article today on Zero Hedge. Jeff Gundlach, who's also he's a multi-billion-dollar fund manager. And he seems to think the same way I think about yields. If we break through 3% in the 10-year, and it might seem far away from there now that we're around 2.5, but don't forget we've moved from 135 this July. We're now 2.5, so 3% is very much in the cards. And he also thinks like me that it would cause a lot of problems, and it would signify the end of the 35-year bull market, where the cost of money has come down massively, and has created all this financialization of the economy and all the asset bubbles. I personally think the Fed's not in control of things, and we'll have to wait and see though. So not much excitement in this after this Fed decision. Of course, gold and silver always get hammered, that's the modus operandi for the cartel. There's some people who still don't believe, central banks don't manipulate gold, like Bob Moriarty of 321gold.com, even though it's public information now that they've been manipulating. Deutsche Bank was fined the other day for manipulating the price of silver. So was HSBC. So that's it for now. If you enjoyed my video, please give me a thumbs up. Share it far and wide, and subscribe to my channel if you haven't yet. And if you'd like to help and donate to my channel, there's some links below in the description. And I'll talk to you later. Bye.